Hello, this is Mike Turner. In our continuing series on getting the most out of the Turner Trends tools, today's session is on the tools hotline alert. So let me just jump right into that and let me show you what's involved. This is an email that I send out to you the first trading day of each week. I try to get it out as early as I can, typically on Mondays. But this is an email that's got a lot of really important information in it because it is the summary, if you will, or the culmination of the weekend's data processing that our computer systems go through. And this is a non-trivial process that we use. The programs will run right at about 30 hours of processing time. To crank through all the data, to look at all the stocks, to look at all of the trends and the analysis of those trends and the scoring and the rating and the ranking of nearly 6,000 stocks and ETFs. So it's the kind of thing that you really want to look for, kind of what's the summary of it? Where is the market and how are things shaping up for the week ahead of us? So let me kind of take you through what's involved with that. First of all, I have what I call the bull bear rating. And this is really kind of a graphic representation of how I think that the market is shaping up, where a +5 is about as bullish as I can see the data coming out of the system is, and a -5 being the most bearish. And in this particular one, it's a little bit under neutral. It's a -1, but again, it changes sometimes. From week to week, sometimes it remains the same, but it's basically an overview or a snapshot of where, after I've analyzed the data, where I think the market is. In this case, it's not overly bearish, but it's a little bit under neutral, which is something to be cautious about. The next thing I put in the email to you is the buy versus short selling ratings update. And so what that is this. Is I take the ratio of the total number of new buy signals, and that's out of the entire database. So when the computer system goes through and analyzes all of the stocks, all the ETFs, it comes back and says, here's the ones this week that are giving a new buy signal, or this week giving a new short sell signal. And so it's not a summary of all the buy signals that are currently being recommended, or all the sell signals. It's just the new ones that have moved enough in the closing week at the end of last week to have moved up enough to give a new buy signal. Prior to that, it was in a neutral condition, or to move down enough to give a new short sell signal. Prior to that, it was in a neutral condition. So this gives you the ratio of the new buys to the new shorts out of the entire database, and it provides an indication of the current market strength and the momentum of the market. When you see the data, and I'm going to show you a chart here in a minute that represents this graphically, but when you see how the market is moving, it gives you an idea of whether or not you want to be participating in or getting out of the way of the market. The next thing is in the email is a sector update. This is where I give you the bull, neutral, and bear rating on all the major sectors, and I'm looking at about 10 of them, and I will give you that rating as to whether or not they are in a bull condition, a neutral condition, or a bear condition, give you an idea of whether or not the overall market is moving that in the direction that you think it should. If you've got, for example, if you've had a lot of all the sectors bullish for a while, and now some of them are beginning to move into neutral, or some of them have begun to move from neutral into a bearish condition, that might tell you that the market, and indeed does tell you that the market is weakening. So you want to begin to look at this so that you can anticipate what your investment bias is. You don't want to be bullish in a bear market. You don't want to be bearish in a bull bull market. So you want to have your investment bias to be in sync with what the market is doing. That'll give you that'll make the odds as high as you can get in your favor. You want to be able to have the sectors moving in your direction, the industries moving in your direction, the indexes moving in your direction. And so one of the things that I show you is what the rating is on all the sectors. Then I go through all of the major indexes. And this gives you a bull, neutral, bear rating on the S&P 500, the Dow, the Russell 2000, and the Nasdaq. Again, giving you an indication as to whether or not the market is trending in one direction or another. If all of them are bullish, then that's good. And I will give you some nuance information as well. I will tell you, well, they're all on the bullish side of the neutral zone, but they're trending lower, and they're not out of that bull bias, but it's not strongly bullish. The trend is down, but we're still above the neutral zone. So I'll give you some insight on the nuances of how the market is moving. I look at the inverses of the market as well. The inverse ETFs of the major market indexes, of the inverse of the S&P 500, the Dow, the Russell 2000, and the Nasdaq. Again, to give you an idea as to whether or not the support there is in line with what the overall indexes are. If you're expecting, if the S&P 500, for example, is in a bull mode, you would expect the inverse of it to be in a bear mode. Sometimes when the market is in a point of tilting one way or the other, it's in a transition mode, you will get a conflict in those two indicators, and that will tell you to get conservative, to not be quite as aggressive about moving into the market one way or the other. Then I show you the oscillator. This is kind of a summary of the buy and short sell ratings, and this is what it looks like. The gray area you see here is the SPY, represents the S&P 500, and the green is giving you an indication of the new buy signals that are being picked up, and the red's giving you an indication of the new short sell. And when these begin to move in certain ways, then and I explain that in my email to you as to whether or not there is significance in how this is impacting the market. If you see this green line, for example, beginning to move higher, that's giving you an indication that the market is likely to move higher in the future. Well, the market has moved down in this particular example. It was flat, neutral, and then has moved down. And you can see that the green line has kind of flat to moving slightly lower, indicating that the market has a propensity right now to probably move a little bit lower, but not dramatically so. On the other hand, the red line, which is the number of new short sell signals, had jumped higher about a month and a half ago, but is now beginning to roll over. Both of these are becoming rather anemic at the moment. So the market's telling you not really a strong indication one way or the other. Well, that gives you an idea of how you want to play the market. Are you wanting to be an aggressive buyer when the market is anemic? I'm not, but you might want to be. I like, again, to have everything moving in the direction that I want to get into. Short or long, I want the market and the indexes and the sectors and the industries to be moving in the same direction. And then lastly is my summary opinion. This is where I go through and summarize everything in a short paragraph to give you an assessment of all the technical indicators and what I think the resulting investment bias is. So this is a great Monday kind of summary of where the market is, kind of gets you set up for how you want to look at trading in the week ahead, how strong you want to be from a bullish standpoint. Do you want to tighten stops? Do you want to get heavily engaged in buying? Do you want to get heavily engaged in going to cash? Do you want to get heavily engaged in going short the market? Those kinds of things I will give you as an overall picture of the market, and it's based on my assessment of all of the tools, functionality, and assessment of each stock, each sector, each industry of the entire database. So it's a great way to get a good handle on looking at the overall market. So I hope this is helpful. I know you'll get a lot out of it when you get it each week, but pay close attention to each segment of the email, because it's there for your benefit to give you a good indication of how the market is shaping up for the upcoming week. Thank you, and until next time, we'll be talking to you. Bye-bye.